Right, very good afternoon, everyone. Thank you for the attention. Okay, I'm the first speaker after lunch, so I have your undivided attention. That's very, very good. Okay, we're going to talk about the private residential market and how you should be making use of the information that I share with you to perhaps close a few more deals. I don't know what is your sense of the market, but from the agency point of view, the sense of the market is that it is picking up. It should be. Okay, if the numbers tell us that, and we are also seeing that there are more agents coming to office to submit deals, and some people do submit a few deals at a time. Okay, so that tells us that the market has indeed picked up. Okay, so let's look at what we're going to cover this afternoon. So basically, I'll go through some market numbers with you. What is the market telling us? Why is it behaving like this? How long is this expected to last? And how, of course, we're going to close more deals in today's market. Okay, bear in mind that what we are seeing today is beyond your control and beyond my control. So we are just a little pond, a little boat in the ocean. Okay, and we basically adjust, okay, our sail to the wind direction. If we look at the rate of price decline, it has slowed down, in fact, significantly. Started with 4%, okay, then 3%, then now it's like the first half will change by about 1.1% down. Okay, so the rate of decline has sort of slowed down. So it's in some people say this is a sign that market is stabilizing. The price is stabilizing across the board. Okay, in the recent official numbers, okay, from the URA, we are seeing that there's a slight pickup in centrally located properties. The price, in fact, went up slightly. All right. Okay, so let me, at this point, just talk to you a little bit about price indicators. For us, very important for us to understand how the market is moving is to look at the pricing trend. Okay, the pricing trend. I mean, if you go into detailed transactions, you will see up, down. And if you go into very small periods of time, like weekly or monthly transactions, you do see wide variations. But what you want to know is to be able to tell a story or tell a trend, right, to the clients that you are serving. So to be objective and to be basically to be able to tell the story more accurately, you basically need a lot more transactions. So for me, personally, I prefer to look at quarterly figures. Okay, quarterly figures tend to give you a clearer picture of the trend rather than weekly or monthly figures. Of course, for sensational headlines and all that, sometimes you see, wow, this property is sold at this price, and all that. Yes, it's a talking point, but by and large, if you're looking at market direction, more accurately, you should look at quarterly, because that will sort of tells you where the market is moving. A few things we have to be realistic about. Number one is that Singapore is facing various challenges, tighter immigration, moderated economic growth, okay, which means company will slow down expansion plans. Okay, estimated more than 20,000 private units completing. This year will be highest, 26,000 if I'm not wrong. Okay, low population, workforce growth, rents expected to decline. So there's a lot of completion coming on. Okay, this will continue into 2017. We need some time to clear up the stock. All right, and then there's restrictions on foreign manpower. So increasingly, you will expect to sign 12-month leases. Okay, new home completions, this is the picture, all right, that we are facing. You will see it will start to taper down, okay, next year onwards, but in the meantime, we have to adjust, okay, and hold out for as long as we can. So you have to be very realistic, okay? So logically, if you take a 12-month lease, okay, 12 months later, you will adjust your rent again. Either it's stay flat or go down a bit, and then perhaps 2017 onwards, you can start to see the market strengthen. So longer term, let's talk about the longer term. Okay, people say the price now is not low. It has come down, but it's still not low. Okay, will it go down some more? The answer is, if it goes down some more, it's going to be very little. That was my answer, right? Unless there's an external shock, because the baseline is already there. Okay, you have your hierarchy. HDB flat already this price, then you have your EC, then your private condo, then your various tiers of condo. So the baselines are already there. So there's a downside baseline. You can't go anymore. So let's talk about future. Okay, so the question is, will those of us who own property, the thing to ask, will my property value still increase in the future? What do you think? Yes, confirm yes. Why? This is the only place on earth, okay, that land is limited. Right? Land is very limited, and the demand is going to continue to increase. And somehow it's very attractive because Singapore's government's infrastructure, everything is a magnet, and it's a safe haven for people with especially so much uncertainty around the world, right, that they will come here. So if you don't have the 15% ABSD for foreign buyers, do you know what will happen? Foreign invasion. You know what's foreign invasion? Yeah. You and I can forget about buying already. You just take 1% of the foreign population that can buy property overseas and come to Singapore and everybody buy one for free, nothing more to sell. Right? So that, in a nutshell, tells you that in the future, things look pretty good. You just need to be able to hold, okay, and not be forced to sell when there's a down cycle. In between, yes, there will be disruptions due to and all that. But if anybody, I have not seen anybody who lose money if they hold a property long enough. Okay, yeah, it's only those people who bought and they are forced to sell interim. They cannot hold out for the longer period. Then they may suffer a loss. Okay, so those are the minorities. Okay, the thing to remember that we remain a very attractive place for foreign investment to come in. And this will help to boost up our economy. So you know that we all marketing agents, when we go and pitch for a job, we pitch against other agencies to try and get the job, right? So Singapore is the same thing. Our Singapore government go overseas to pitch for investment into Singapore, go along and compete with other countries. So you know that we get bulk of the investments compared to other countries. So that tells you that our economy is very, very strong. Okay. Of course, the other thing that I think Mr. Chan talked about this morning was the foreign manpower thing, right? The population. I mean, without going into specific, you know that the plan is already there. The thing is that how to be selective and get the kind of people that we want, all right? And never a better time than when there are uncertainty overseas. When there's uncertainty overseas, the people who are more qualified, okay, will be lining up to want to come over here. Okay, so that's where we are able to capitalize on the situation to get more people. So this will happen over time. All right, we already have the baseline volume. We don't need that much. But now it's to go for quality. So, but you know that this thing will happen over time. Okay, so the other thing to note is that 90% home ownership in Singapore. All right, the government as the custodian will do everything they can to create better life, better homes for all of us. And so the master plan falls into very, very important part.